Everybody loves getting a high offer when selling their home. Obviously, it's very exciting, but the highest offer isn't always the best offer. So in real estate, the strength of an offer isn't just about the number, it's about how solid it is and how likely it is to close. Now, I was selling a property that wasn't on the MLS yet. We were just kind of in the midst of preparing the home for market and getting it ready for sale, and a neighbor had popped by. They fell in love with it because it was truly one of one. Plus, they really wanted to stay within that school district. So they offered well above market value. That way they would look enticing enough to my client for them then to forego going on the open market. Now, at first glance, this offer obviously looked incredible, especially in this market, given that prices are doing what they're doing. But based on the most recent comparable sales, I knew that the appraisal would never support that number. There was simply nothing in the area to justify it. So I flagged that concern to my sellers and explained that even though the offer was tempting, there was still a real chance that it could fall apart once the lender's appraisal came back in, otherwise known as an appraisal gap. Now, because we weren't on the MLS, there really wasn't much risk to my clients here other than potentially wasting time. So in today's video, we're going to discuss what an appraisal gap actually is, why it happens, and most importantly, what to do if it happens to you, whether you're a buyer or a seller. My name is Alice Prince. I am a real estate broker here in York Region. I help buyers and sellers make sense of the real estate market, and my goal is to always put things into perspective. So whether you are buying or you're selling or you're just kind of curious in terms of what's going on, I'm here to break things down for you to help you see the bigger picture with real numbers to support it. And if you find this video helpful, make sure to like and subscribe to the channel so you don't miss out on the next video. But if you're thinking about maybe making a move in the next 3, 6, 12 months and you want some guidance, there's a link in the description below where you can book a call and a time to chat with me. So appraisal gaps don't necessarily happen every day, but when they do, they can completely throw a transaction off the track if they're not handled properly. And lately, with the prices continuing to adjust across York Region and with many parts of the GTA, I'm starting to see this happen more frequently. So unless you're buying a home in cash, you're going to need a mortgage, and within that, your lender will need to do some sort of appraisal. So the purpose of the appraisal is to make sure that the property is worth what the buyer has agreed to pay, since the lender will only finance up to that appraised value, not necessarily the purchase price. Ideally, the appraisal happens during the finance condition period, so any issues can be addressed before the buyer waives their condition. But in reality, that's not necessarily always the case. In some cases, instead of doing a full in-person appraisal, the lender uses what's called an automated valuation model, otherwise known as AVM, which is basically a data estimate that compares the property to recent sales in the area, the home's condition, and its location. So if the AVM supports the purchase price, no full appraisal may be required. But if the results fall short or the property is unique, the lender will often request a traditional appraisal later in the process, sometimes even closer to closing. Because the timing really depends on each lender's internal process and whether they feel an appraisal is necessary or not, it can sometimes lead to surprises if the appraised value comes in lower than expected. That's why it is so important for buyers and their mortgage brokers to clarify early on whether an appraisal or an AVM will be required and when it can be completed to avoid any sort of last-minute stress. Now, if that appraisal comes in at or above the purchase price, there's no problem. The deal moves forward as planned. But if it comes in lower, that's where we run into something called an appraisal gap. So here's a quick example of this. Let's say a buyer agrees to paying $800,000 for a home, but when the appraisal report comes back, it's valued at $770,000. That $30,000 difference is the appraisal gap. And here's the thing, that bank or lender is only going to lend based on the appraised value, not what the buyer offered, because the bank is looking to mitigate risk. If for whatever reason you default on your mortgage, the lender or the bank wants to feel secure that they will be able to recoup their money. Now, if you're putting less than 20% down, your mortgage automatically requires something called default insurance or mortgage insurance. And that insurance is designed to protect the lender and not the buyer. Now, here's why that matters. Now, when the mortgage is insured, the lender takes on less risk because the insurer can then guarantee the loan in case the borrower defaults. Because of that added protection, lenders are often more comfortable approving the mortgage without needing a full appraisal. Now, in many cases, the insurer or the lender will use something called an automated valuation model, as we mentioned, to confirm that the purchase price is in line with the recent comparable sales. So what happens if the appraisal comes in low? Well, there's a few possible outcomes, and the simplest way to handle this appraisal gap is for the buyer to cover that difference. So let's just walk through this quick example here. If the agreed purchase price is $800,000 and the buyer plans to put down 20%, that's $160,000. But if the home is appraised at $770,000, the lender will only finance based on that lower amount, not the full purchase price. That means the lender will approve a mortgage for 80% of $770,000, which is $616,000. They'll expect a 20% down payment of $154,000 on the appraised value. Now, since the seller still expects the full $800,000, there's now a 30% gap between the appraised value and the purchase price. So you have two options. Number one is obviously to bring in extra cash. Add that $30,000 gap to your down payment. That means instead of putting down $154,000, you now need $184,000 total. Secondly, you could possibly reallocate part of your original down payment. Use $30,000 of your original $160,000 down payment to cover that gap. That leaves $130,000 as your actual down payment, which increases your mortgage to $670,000. Because that works out to about 16% down, your loan to value would now be higher than 80%, meaning you'd also need to pay for mortgage insurance. And your monthly payments would be higher as a result of this. Now, another option that you have as a buyer is that you could go back to the seller and try and renegotiate the deal. Keep in mind, though, the seller does not have to agree because unless the appraisal is being done during the conditional period, there would already be a bonding contract in place. However, sometimes it is in the best interest of the seller. If they have to relist, they're likely going to be facing the same problem again if those values have shifted over a period of time. And the last option, probably the worst and probably one that you don't want to find yourself in, is that the buyer is unable to close or they refuse to close, and they will likely be taken to court and sued for thousands of dollars. Now, some people think that a buyer would just forfeit their deposit, but that's not the case. The truth is, it would be in the hands of the court, and the seller could then be entitled to damages beyond deposit. For example, if the home sells less later on, let's say $100,000 less than the original offer, the seller can go after the buyer for that difference, and that could turn into obviously a nightmare and a legal battle that many don't want to get into. As a seller, you should be asking your agent questions about the buyer, and your agent should be doing the same on your behalf. It's their job to dig deeper, to ask for proof of pre-approval, and to get a sense of how solid the buyer's financing really is. Building rapport with the other side is incredibly important, and it is something that we always strive to do. Of course, the buyer's agent has an obligation to protect their client's best interests and to not share personal or sensitive information, but a good agent knows how to ask the right questions in the right way. So if this is something that you have experienced or you are experiencing and you are, as a buyer, are financially capable of covering it, it can still completely change how you feel about the purchase, which I totally understand. What started off as excitement and pride about your new home can quickly turn into self-doubt or second-guessing the entire thing. You might be thinking, did I overpay? Is this a mistake that I made? But here's the reality. A low appraisal does not automatically mean that you overpaid. An appraisal is just one professional's opinion of value based on recent comparable sales, which sometimes can lag behind where the market is actually moving. And even that can be challenged. You can go back to the appraisal or appraiser and challenge their opinion. For example, if prices are rising quickly, there might not be enough sales to support your purchase price yet, even though it reflects in current demand. On the other hand, in a cooling market, appraisals might come in lower because the comparable sales that they're basing their information on are already trending down. Now, in both cases, the appraisal is capturing a snapshot of the market at a specific point in time, not necessarily the full picture. So while it can feel like a low appraisal means that you overpaid, that's not always true. The value you placed on the home based on location, upgrades, the condition of the home, and how it fits into your needs may still represent fair market value in a challenging market. It's just that the lender's process focuses on recent data, not emotional or forward-looking factors. That's why it's always so important to buyers to understand the context behind the appraisal. Because while numbers do matter, so does perspective, and keeping that in check can help prevent unnecessary regret over what might still be the right home for you and a smart long-term purchase. So how do you avoid these situations? Well, if you're buying, try to make sure that the recent sales in that area for your similar home support your purchase price. If the market's continuing to soften and your closing is in, let's say, a few months away, try to negotiate a purchase price with that in mind. So try not to go to your absolute max. You don't want to be in a position where every dollar is spoken for. Leaving a little bit of a buffer can really reduce the stress if something unexpected happens, like a smaller appraisal gap comes up. And if you're selling a home, it's important to remember that overpricing can sometimes backfire, not only because does it severely limit your chances of getting any showings or offers, but even if a buyer is willing to pay your number, the appraisal still has to support it for the deal to hold together. For both sides of the transaction, it really helps if you're working with a professional who's proactive and who can get ahead of these things like this and ask the right questions. Whether you're selling or you're buying, there's often some emotion involved in the process, whether it's a family's home that you've cared for many years, or you as a buyer when you finally find that perfect property that you've been looking for. As a realtor, as much as I am in my client's corner, we don't have the same emotional attachment to the homes that they're buying. So it's our job to get ahead of any sort of potential issues and to explain to them what the possible outcomes are. Because you might love me and be thrilled when I bring you an offer that seems too good to be true, but you probably won't be too thrilled with me if this was falling apart at the kitchen table based on something that could have been addressed and avoided earlier on in the process. So whether you are buying or selling, the best approach is to be aware that these things can happen, right? Ask questions, leave some room for flexibility, and surround yourself with professionals and people who will help you get ahead of these problems so that you can feel confident in your move. Ciao for now, and I'll catch you on the next one.